Well, let's get this party started. Good morning. This is the TriggerCharts pre-market rundown for Friday. Where are we? November 15th, 2019. I hope everybody's doing great today, having a great trading week, having a great week overall, and ready for some action. Talking about areas of technical analysis related to charts. And we focus in here on TradeStation. Primarily, we're talking about the indicators that we have in the trading app store, as well as a whole host of different theories involved in markets. We talk about economics, a quick overview about that each and every Friday, as well as what stocks are moving and where we're looking for breakouts and breakdowns. So hopefully you're ready. In the chat, you can put any questions that you have and as well as any stocks that you want us to look at throughout the morning. We'll take a look at that towards the end. One of the things I want to mention to you is that, of course, this is for educational purposes only. And it is not an offer to buy or a solicitation of any kind to sell, any kind of recommendation whatsoever. So right now on the top of the page that you're looking at right now, you'll see that there is a whole bunch of words. That basically is telling you that this is not a recommendation or a suggestion or any kind of advice at all. So everybody's ready with that. I'll mention to you if everybody can hear me. Can everybody hear me? Anybody can hear me? This is a two-way conversation, even though I'm the only one on the picture here. We have a brand new microphone, so I want to make sure that everybody can hear us really well here. Everybody says, sounds good? Okay, let's close this up. And of course, in the chat, since it is an interactive discussion, please do me a favor and put your, right there in the bottom there, or somewhere where it says chat, put in your stock symbols, whether it's futures, whether it's Forex, whether it's an ETF or a stock. The important thing to know is that everything that we designed these particular indicators for is basically, I would say, agnostic to any instrument. In other words, we don't care if it's an ETF or a stock or a future or Bitcoin or cryptocurrency. These indicators work in a specified manner to provide a line in the sand where exactly there is for a breakout opportunity or consolidation, where we're looking at the footprints that other traders are really placing their bets on the market at what price, and where they're willing to say, you know what, we're not going to buy anymore here, or there's no buying, no activity at all, and it starts to move up higher into the next level. I'll also mention before we go on any further, there was a link I put in there, and I'll put it in again right here. This is for the 10-day free trial of any of the indicators that we have in the trading app store for TradeStation. There was one other thing I want to mention. Oh, yeah. All of the replays of this and of our past discussions, as well as a lot of educational tutorials, are available over on TriggerCharts.com, as well as all of these recordings from Friday are on YouTube on a weekly basis. They go up about an hour after we actually tape. So let's get right into this, why don't we? Let's talk about what's happening. Clearly, we see that Powell is speaking again, and the Fed is saying basically, you know what, we're on hold. We don't care that inflation is kind of peaking up a little bit higher than anticipated. We don't really think that there's any worry, any bubbles at all with the stock market reaching new highs on a daily basis, on the yields on the low end. We don't see really anything as a problem right now, and we're willing to keep rates low. And they basically said they're on hold for a while unless they see any significant change in the market in terms of the economics, any stress in the financial system. They are really looking to make sure that they get ahead of things. And you can see that the numbers we saw over the last few days and overnight in China, in Japan, in Europe narrowly missed going into a technical recession yesterday with a GDP print of plus 0.1. Now that could be revised lower, and that oftentimes we do see during these kinds of slowdowns, there are times where we do see revisions lower, and it could actually still go into a technical recession. And we don't see a recession, nor do we call a recession, until 6 months after it actually happens, because we need to have 2 consecutive quarters of negative GDP prints. So where we are right now with Europe isn't a question mark. Point is, whether you want to call it a recession or not, the fact remains that Europe is in a major slowdown. China is in an incredible slowdown, numbers we haven't seen in 15 to 20 years on the downside of growth or lack of growth. Japan is just muddling through it. The world is basically a really ugly place when it comes to economics. The U.S. pretty much the only standout right now. While we have slower GDP expected to be 1.9, maybe 1.5, possibly even down to 1% next quarter. We see that the manufacturing area is in recession. We see services doing well. Retail sales today picked up a little bit, a print of 0.2%, which is right on expectations, higher than last period, so that's good. We see that a variety of other indicators like the regional manufacturing numbers are slowing down significantly. Productivity is slowing down, capacity utilization slowing down. There is a clear slowdown happening, and that's why the Fed wants to get ahead of things. And what that has done is it's created pretty much a green flashing light for people to buy into the markets, regardless of the valuations and looking at forward numbers in terms of earnings. So markets are pretty much also getting used to the trade headlines. You know, for a while we saw that anytime there was any kind of negative headline with relation to the trade deal, the trade kerfuffle, the trade war, the trade skirmish, whatever you want to call it, the fact is that if it was a positive number, hey, markets really picked up really nicely. If it was a negative discussion, that there was something of a problem, more tariffs going on, more infighting going on with part of the details, that there would be a sell-off. We have seen that, but it's been very momentary. In other words, very transitory in terms of the information comes out, the news comes out, and the markets, like happened yesterday, there was another article in the FT that was on top of the article the day before that there's a snag, some kind of a snag in the discussion of agricultural purchases and technology transfers, and that, you know what, we're not going to do this deal unless it's right in the skinny, partial, phase one deal of the trade deal. And we all know it's pretty much a bunch of hooey. I mean, it's just this great headline that keeps on passing that would get something done. But the fact of the matter is that there was a framework done and it's nothing more. But markets seem to like it. So you know what? We're not going to fight that. In fact, yesterday, when we saw that another headline came out that there was this snag and there's possible postponement or not getting this deal done, in front of a December 15th increase of some of the tariffs on some major areas like personal computers, technology, and a variety of other retail goods that will happen 2 weeks before the major holiday season. What's happening right now is we're seeing a lot of front loading still going on in the area. That's why we saw the chip companies breaking out substantially, electronics really bulking up on their inventories. So what else do we have? Here's something. We see a little bit of a thinning out of the overall breadth of the market. Select stocks are really starting to pull things up and higher, Apple being one of them. Disney the other day with a announcement that they added 10 million users the first day of their new Disney Plus offering. Did you get that? I know my family bought it. I didn't buy it, but everybody else in my family seemed to have gotten it. A lot of people are loving the fact that you can watch all this. I don't know how fast this is going to wear off. It's the shiny new penny. People just said, you know what? Let's check it out. We'll buy it for 10 million. You know, total about 780 or $800 million of additional revenue in. We know it's going to cost Disney a lot more, but Disney was up close to 7% at an all-time high, pushing the markets up that day, and the Dow Jones Industrial Average finished at an all-time high that day, where the NASDAQ and the other markets were kind of just humming along. But again, select stocks, and particularly the big ones, the Microsofts, the Apples, are really doing an amazing job at keeping the markets higher, especially those that are capitalization-based and weighted from a index standpoint. We have the 3100 magnet level on and resistance level right now. We see that the S&P 500 mini futures trading at 3107. So we'll crack that number once again. We got to about 3102 on Wednesday. Got to that point. A news item about the trade deal happened, kicked down lower. Couldn't really get up to there again yesterday. But now with Larry Kudlow coming out last night, futures spiking up at about 8:30 p.m. last night, even though we saw more protests in Hong Kong and Hong Kong having a big problem. China injecting a whole bunch of money into their financial system once again due to the fact that they're seeing slowdown in property growth. All the things that are happening. Bottom line, we add that to the fact of Mexico dropping the interest rates by 25 basis points yesterday, Powell speaking, and everybody's just in a tizzy and excited that the whole world is in a synchronized rate reduction process vis-a-vis the central banks. So we do have new highs. that the Dow Jones Industrial Average, the S&P 500, NASDAQ, the small caps, again, I've repeated this, is the second time in the last 2 weeks we talked about this, not at an all-time high yet. Sentiment indicators remain near peaks. Everyone that we talked about last week we talked about the Spearman. We talked about the KRI indicator. We talked about the McClellan oscillators. We talked about, there's a new one you're going to read about in the next couple of days. We got the Titanic omen, or the Titanic warning, and the Hindenburg omen hit for the NASDAQ yesterday. What does that mean? I have no idea. Bottom line is, there's a bunch of things about getting to new highs, less companies actually participating, and it supposedly is supposed to foretell that there's a big drop about to happen within the next couple of weeks. We'll see what happens. Last week, we discussed also things like Bollinger Bands and RSI nearing the peaks and the fear-greed indicators, which are there. Fear-greed came back down a little bit from the 91 level to about 88. But again, moving markets this week, and I think into the end of the year, is the idea of FOMO, the fear of missing out. Again, we talked last week about the MOMO turning into, which is momentum, turning into FOMO, and here we are right now. A couple things I want to mention, then we're going to get into some of the stocks. We'll talk a little bit about the right side here, which I have just the S&P 500. Again, I overlaid the Bollinger Bands with a 50-day moving average, 2 standard deviations above and below, and you can see that we are creeping up here. We're moving right along into the area right there on the 2 standard deviations above the 50-day moving average. That's important because it doesn't happen that often. Sometimes when it starts knocking on top of it, we see a move lower after that. But that's not really happening right now. We see that it's staying very elevated right now. This is a sign of a little bit of an overbought market. And one thing that we do know and that you have to pay attention to, you have overbought markets and you have oversold markets. You have severely oversold, you have severely overbought. One of the things that we know is that markets really don't stay oversold very long because basically people are in line to be buying stocks on a regular basis. When things get too cheap, people think there's a bargain. Unless it gets really crazy, then they get fearful. On the other hand, when things are at the top, people say, you know what? I know it's high, but you know what? It possibly could be going higher. The idea that the stock market over time will go higher is basically cemented into the idea of what markets do. And if you look back as long as you want to go back to the 1800s, you want to go back to 1920, you look at where the stock market was and look at the long-term trend. Obviously, it's from bottom left to top right. You look at a chart, it moves up over time. There have been times with major drawdowns, but those usually resolve because companies are basically designed to make money any way possible. One of the big things they're doing right now is stock buybacks in a way to financial engineer EPS and to hold prices higher. We know that's going on. We talked about that last week with all the companies that are buying and the Goldman Sachs survey of how much is going to be bought into over the next year by corporations, upwards of $480 billion. So you have to respect that. Now, we also have a couple of things to talk about in terms of next week. We have housing starts, we have the Philly Fed, we have existing home sales, and leading indicators. Some important data has been pretty much on an uptrend in terms of housing starts, new home sales, existing home sales, slightly moving positive towards the positive side compared to where they were. A lot of that has to do with the fact that we have a lower interest rate environment right now. That's playing very well. We have a 4-hour training, coaching, online evergreen course that's available. Everybody that signs up and becomes a subscriber, not a trial, but a true subscriber to the Commander Series, just email us and we'll give you access to the 4-hour training. I really think you'll like that. It's a $199 value. So if you sign up for the $149 monthly fee for, which, I mean, one trade, you'll make your money up on that. Let's be honest. $149 for the Commander Series per month. You get $199 value for a coaching course. I mean, that makes sense, right? Just gave you $50 worth of data and information right there. We're going to talk about the Qs and Disney, and we're going to talk about some oil and all that. So let's get right into that right now. This is the Commander Series you're looking at right now. We got 105 points on the upside of the YMs, which is the Dow Jones Industrial Average Futures. We have 10 points on 10.5 points, 10.75 points on the SPOOs, the S&P 500, NASDAQ up 43. Gold is down about $5. So right now we're seeing that, and we're seeing that crude oil can't really get above that 57 number. Let's take a look at a few charts here. Let's take a look at the SPY right now. Clearly seeing that, I'm going to break this up. The right side here is the daily. So this is the daily right here. Right here we're looking at, what are we looking at, 30 minute? Let's see, 30 minute, I think we're looking at 60 minute. That's fine. I like to look at short-term and long-term trends overall. We're seeing that we saw that breakout. I think this is an important level that we saw here. First of all, I want to really focus on a couple of things. Down here is the aileron. This is an add-on. This is not part of the Commander series. This is the RSI that we talked about last week. RSI is at about a 71.97, over that 70 threshold that we've been talking about as a demarcation zone of where we are severely overbought in this. But it keeps on going up. And I think that, again, if you keep in mind that things can be overbought for a long time, markets could stay irrational much longer than you can stay solvent is the theory there. I think there's something to be said about that. We saw the aileron break right about here. And we'll highlight this real quickly. We saw change is momentum. And that coincided to a hold of support, which is the green line that we see inside the chart here, and then a breakout and pretty much never looked back. Once we got above, and I'm going to kind of use our line tool right from TradeStation, once we got above this level right here, about 30.31, give or take, rough number. We'll focus in on this also, clear off all of our drawings. Once we got above right there, 30.28, there was nothing else holding back the S&P 500. That was a major breakout point with really no resistance to be found. So right now what we're really doing is getting involved in a situation where we really do not have anything to judge other than the fact that right now, as we know, hard resistance, when you're above it, turns into support. When you're below it, it turns into resistance, so it just reverses back. So right now, we could think that the long side of the trade is a much better opportunity. As you can see by the green highlights that we draw very easily on the chart. And you can see that down to about 30.28 is your stop out zone. But with that in mind, is that really a problem? We back this up a little bit and just, again, easily draw some lines. We'll kind of just pull this down a little bit. I would say that really I would look at, we could see a dip down probably to right about the 3,000 level, which is an important level. And that still is a good support level right there. There's a lot of air right here. The opportunity for a fall is pretty good because really we don't have any significant amount of data here. Let's take a look at something. Let's look at our radar. So right now, when we put this on, which is a granular view of the market profile that we utilize, which is a volume-based indicator that utilizes each and every tick to calculate how much volume is actually being put into the market at that point, at that price, on that stock, on that future, whatever it is. Well, right now we're looking at here, I'm going to really get in here, is that there is an area that is, I would say very clearly, we could use a box tool, right here, right here's one, and then below here's another. You see there's not a lot of volume to the left, always looking from right, left. What do we say? Look left. Looking left really provides you the opportunity to understand where the volume is really playing. I utilize the radar, which is part of the Commander series. I turn it on, turn it off to get that granular view so I don't really create too much on my chart that really will confuse me, make it look very difficult for me to see really what's going on internally. But we did fade that out a little bit. You can see the actual price performance of the candles behind it. But really, I want to take that and turn that on and off and find out where it is and then draw my lines again. So now what I'm going to do here is I could simply take a line tool, which we have right here. We have one already. And I can say, you know what, this is an area that I would look at, 3068. Take another line tool and possibly I could draw another one. I could say, okay, well, that's an area and this is an area of concern of mine, 3030. That corresponds to a good level of support looking left at a last altimeter that was drawn. The red, the green, the blue lines are called altimeter. This is called the radar, which is a traditional market profile with a little bit of a twist. We put some algorithm spice in there so you can see what's going on and really understand what's happening. I really encourage you, by the way, if you're trading and you really want to understand exactly where there are areas for support, for resistance, for breakouts and breakdowns, you can't just see it on a chart yourself. You have to blend in something like this, utilizing other indicators like RSI. If RSI, if we just talked about how things can stay overbought for some time, how do you know whether it's going to stay that way, whether there is an area for a fast zone vertically through time, or if it's going to horizontally consolidate over time? How do you know that? Well, this gives you a really good indication of that, and that's why we did this. And again, I built this so that I could use this in my regular trading, as well as what we do for client accounts when we work on technical analysis in certain areas. I'm going to take off the radar right now and clean this up. We're going to also clean up our drawings right there. We're going to even take off these particular lines. I encourage you to use drawings on your chart. You can even do things like simply put in some text. You can draw something and see, breakout. So you can put some notes here. Kind of put that in, kind of move that around, put that there. Or I bought over here for this reason. You could use that and it would stay on every one of your, or stay on this chart on a regular basis on your daily every time you pull it up. Let's keep going on. Same thing on the Qs. They look pretty much the same. We have a little bit, let's put on the Qs and put on that radar again. We have a little bit of a bigger zone right here. I would say that really we got to look down to about the 80-65 level. That's where I would look at for possibly them trying to defend and support the overall market right there. The potential for a rollover is very high. I know that we're seeing that the markets are pulling up right now on a Friday once again. But the bottom line is that we're seeing some weakness in certain areas, excluding Apple, excluding the semiconductors. But underneath the NASDAQ, there's definitely a lot more that's going on. As a matter of fact, if you read about the Hindenburg omen from related to the NASDAQ, you'll see what I'm talking about some of the big companies that are really doing well. But the 52-week highs and 52-week lows and the daily highs and the daily lows are not confirming this. Crude oil, let's take off this radar right now. Okay, let's actually take off our RSI also. So crude oil is in a bit of a consolidation zone, can't get above this level, and you'll see this is not a magic number that we drew, but we had this in for some time, back to the beginning of October, and we're showing that you can't get above this level inside of the crude oil complex right now. What I would say to you, though, is, let's kind of make this a little bit bigger, but what I would say to you is, where would I look for this to break out? Well, clearly, I would play this that if it is above, we'll call it 57 and change, 57 and a quarter, that would be a breakout opportunity. Currently trading about 56.82. There was a negative number on the builds, or the builds really added up this week dramatically, and that really didn't, you see it just tick down a little bit. Look at this end number right here. So it ticked down and came right back up. There is definitely support in the crude area. Why not? We have easy money right now. And basically everybody can just utilize all sorts of margin and get involved in the markets, whether it's the stock markets, the crude markets, the ag markets, whatever you want to do. And it makes it for an easy money situation. So I would look for that couple of things. I would be a little bit more bullish due to the fact that we've seen some negative headlines in terms of the crude complex. In addition to that, we have Saudi Aramco, which is trying to launch their IPO and get as much money as they can for it, and they will do whatever they can to try to keep oil prices elevated. We saw OPEC come out with some numbers and some commentary about the potential utilization of crude products, and of course, it is pretty bullish. I would say that they have an opportunity possibly move higher. This was that the strike of the drone strike on Saudi Arabia came right back down afterwards, moving back up. I would say this is more of a bullish side to all this. Gold, a lot of you like gold. Gold's in Nowhereville. Gold, really, you're at a support line, 34.48. Really, excuse me, not 34.48, 14.48. You can get 1500s, kind of a range. We're seeing this in a sloping area. You can see that the aileron is showing that the momentum is negative on this. This is not a long right now unless something apocalyptic happens, it looks like. But with the idea that we have easy money, even though we have easy money, even though we have interest rates coming down, even though we see central banks continuing to drop and bond buying going on, in other words, money printing happening, the fact of the matter is that this is being used as a refuge against risk, not really holding up so well because, well, it's not happening. EEM, which is interesting, we're seeing a lot of problems in the emerging markets, really breaking out nicely recently above this level here, about the 43.15 level, and came back right into it as the dollar picked up in value, but we're seeing that there is the momentum starting to slow down ever so slightly. Let's talk a little about some things to watch this week. SINA dropped off a cliff yesterday, this long consolidation. I think this is really interesting to look at. We have this really long consolidation. Let's take a box tool to draw around the consolidation. And you can simply do that, which I can't ever seem to find my box tool. Where is my box tool? Down here somewhere. Where's the box tool? There's the box tool. It was hiding right there. So we take this and we draw this box, and we can see there's a big consolidation around that area. Was not able to really peek up into here. Now this area right here, see this area right here that we're looking at? That's a hole. If you can get above 45, which that would take a long time, considering it's right now at $34 a share, but if you get above that, you really have a good shot of a big move up. This is obviously a consolidation that broke down. Not a good look overall by any means. So let's kind of just remember that. Leave that on there. You can kind of bring that back. Weibo, same look. It has a lot to do with SINA, obviously. This is the Twitter, I guess, of China. And you can see that we had this pretty good consolidation in the range right there. Broke down, but really didn't break down as hard. You can kind of, if you want, really look at the consolidation there. Right at the bottom of the consolidation, if you look left, we try to find something. It did stop right on its high volume node from the past. Again, we look from right to left. We look left, and what we find here is right about here. Look at that. Magic. We just draw a line right on the high volume node of a past altimeter, and it stopped dead on that number. So interesting to look at. Momentum is starting to change. It looked like it was overdone for a while, looking for a downstroke. TLRY. I don't know if people watch this. TLRY is a stock that was, remember this? Upwards of 300. Is one of the first pot stocks that came out. All right, let's take a look at some of the stocks you have here. I'm going to kind of buzz through a couple of these. What do we got? Lending Club. Lending Club. I think this is for Bill. Lending Club saw a nice move off the bottom here, and what you have now is the aileron showing that momentum is on the side of the bulls. We did see that there was a bit of a hole that happened here, spiked up right into it, but then got stopped and stuffed like a volleyball player. Stuffed right at the top end of that, came down into here. Right now, this does look like another flag pattern that could see a continuation. You really need to get above this level, this 35.08. I'll call it 35. Oh, excuse me, 15. My eyes are not so good today. 15 on the Lending Club for it to move, but you do see the momentum on the side of the Lending Club. Couple more. Kellogg. Kellogg is in a nice potential breakout here. One of the things you see is right now, if we just draw a line, let's just draw that little line tool, why don't we? And we'll just draw it right there. I would say when I look at this and I just kind of look at the stock chart and I just say, okay, what's going on here? I would say there's a bit of a breakout opportunity here. And the breakout opportunity really, when I look at this, is when I see this area here oops, let's click there. That is not a lot of overhead resistance on this. You can see that very simply by just looking at the lines that we draw very simply. And that's why we draw them, to make them simple so that you don't have to spend a lot of time looking at, okay, well, what's going on with this? What's going on with that? What does it mean? The lines give you all you need to understand. When you look and you see that there's nothing there, there's a hole. And the holes mean that you can see a quick move vertically through time. Right now it's trading up about 45 cents, about 64.50 in the pre-markets. Bottom line here is that there's a good opportunity that if it could surpass that, you'll see a nice move to the upside on this. SWKS. Skyworks Solutions, antenna company and technology company involved in smartphones. Nothing to say bad about this, although you got this area that I look at. 95.43 is an area you need to look at for a breakdown. You got the momentum that's going with us. Obviously, we see this as a really good chart overall, so that's looking good. And we got oil refiners, Van Eck oil refiners. I mean, this looks pretty good in terms of the move. We're seeing a momentum starting to slow down here, actually get into the negative zone. You got a problem here. And if you see this and you look at this and you notice this, what is the problem? Basically, you have an area in here that has nothing. And if we kind of take that and draw it left, oops, take the wrong thing. There we go. Got to be careful when you drag these things. Let's draw it left. There really is not a lot that's going on here. And the potential for a drop down to where is it, 29? Talking about $1, 3% drawdown is really all you have there. So I'll mention again that if you want to get the 10-day free trial, go over to the TradeStation site right there. Go to TriggerCharts. Join me every Friday. Tell your friends about this, please. We have a great group that is joining us each and every Friday. So that's growing. That's telling us we're doing the right thing. We'd love to hear from you. Any questions you have, info@triggercharts.com. Make sure you like the video on YouTube as well. And I want you to have a great week and make sure that you do what you can to make some profits. And I will see you again next week. So thanks for joining me.